People who trade and invest in the stock market want to make money, but they go about it in different ways. You've probably heard the terms investing and trading, as well as people debating whether to invest or trade if you're interested in the stock market. This video compares and contrasts stock market investment and stock trading, two very different games with very different rules that may aid in the development of wealth. More importantly, we will consider which questions are more profitable, and should I prioritize one or the other? You've come to the right place if you want to know how they differ and which one is better. Hello and welcome. Today we'll discuss trading versus investing in cheap stocks, which will yield a higher return. But first, confirm that you have subscribed and click the notification button. People who are new to investing have a lot of questions and concerns, such as where to look for reputable firms to invest in and what factors should be considered. What will be the best entry and exit points and so on? However, the one that most concerns some is whether to profit from the stock market through trading or investing. Investing, as opposed to trading. Investing and trading are two distinct methods of profiting from financial markets. While investing entails purchasing and holding a portfolio of stocks for an extended period of time, trading entails purchasing and selling stocks on a regular basis in order to profit from price fluctuations caused by demand and supply consideration. Compounding growth, also known as reinvestment or profits, is a strategy used by investors to grow their money over time. Dividend income, bonus shares, stock splits, and other benefits are available to investors. Furthermore, investors consider the stock's business quality, historical performance, and future growth potential, as well as the company's business value in relation to the market's worth. Traders, on the other hand, profit by analyzing market sentiment and identifying stocks that are likely to experience a significant upswing in a short period of time. Traders buy these stocks for a limited time and then sell them as soon as they reach the target price. Traders also use a stop-loss strategy, in which losing positions are automatically closed off, lowering the risk of a loss. Trading and investing have both been demonstrated to be effective ways of profiting from the stock market. The question is, which is more profitable, and how can you successfully apply these to make money? It is critical to weigh the advantages and disadvantages of trading and investing before comparing them. Let's take a look at them one by one. The benefits of trading traders can outperform the market by purchasing at a low price and selling at a higher price in order to maximize their return on investment. Once you learn and understand trading concepts, you can earn 15% to 20% on your money each month. Profits are coming in more frequently and consistently. As a result, traders can profit from a declining market by short-selling the stock or selling it first and then buying it back later. When a trader has a negative outlook on a stock or the market as a whole, he will use derivatives to short-sell the stock and then buy it back when prices have dramatically corrected. Because traders buy and sell on a regular basis, their profits are recurring. Their profits are predictable, allowing them to reinvest them and grow their trading capital base. Furthermore, because their investment horizon is so short, their capital is not tied to a stock for an extended period of time, which reduces their market risk exposure. Trading's disadvantages. Short-term trends can be difficult to predict. Attempting to forecast short-term market changes necessitates a thorough examination of market sentiment and other traders' psychology. It's difficult to analyze attitudes because there are so many variables at work, making it impossible to predict future outcomes. As a result, trading is a high-risk, high-reward proposition. Trading necessitates constant observation of market movements, which means that in order to make money, you must constantly examine market data, news, and trends. Stock trading is not for everyone because not everyone has so much free time. Trading stocks is costly. Each stock market transaction incurs costs such as a brokerage fee paid to the broker who buys or sells stocks on your behalf, as well as taxes. These expenses must be incurred each time you buy or sell stock because a trader frequently buys and sells. This fee must be paid on each transaction, making it costly. Before we get into the advantages and disadvantages of investing, please like and share this video so that your friends can learn more about stock investing and trading benefits of investing. The compounding effect works in your favor. It makes me think of a Warren Buffett quote. A perfect business achieves extremely high returns on capital while continuing to use a significant amount of capital to achieve those high returns. This becomes a compounding machine. Each stock represents an ownership stake in the company's operations. The power of compounding works in your favor. When you invest in a good business, the value of the company rises. So does the worth of your investments, even if they are inoperable. This allows investors to earn a source of passive income, dividend income, bonus issues, and a slew of other benefits from long-term investing in equity. Investors benefit from the company's regular cash flows in the form of dividends and bonus shares. Dividends can be reinvested in the firm, allowing you to make more money in the future without having to take any money out of your pocket. Bonus shares, on the other hand, allow you to increase your stake in a company by receiving additional shares in exchange for the ones you already own. When you invest in a company, your one-time investment compounded as the company's value increased, providing an excellent source of passive income. All an investor needs to do once in a while is take a look at the company's financial performance and make any necessary changes to the portfolio. Long-term capital commitment, because investing is a long-term game that requires committing your wealth over a longer period of time, exposing your money to a variety of risks. You may not be comfortable with long-term investing necessitates patience and a higher risk appetite, as you could lose all of your money if your investment selection fails. It's a slow way to get somewhere. Earn money. When we compare the percentage returns obtained from trading versus investing, we can see that the percentage return on investment is significantly lower. A 20% per annual return may suffice for an investor. A trader with some experience and analytical ability, on the other hand, can earn 20% per week. You could be squandering your time by investing rather than trading. It cannot be a source of active income if you have a talent for picking the right stocks that will rise in value in the short term. Unlike any other business or job where money comes in, consistently investing does not generate a cash flow, making it difficult to make a living from it. So there is no better alternative to investment or stock trading. Trading can outperform investing at times, while investing can outperform trading at others. However, in the long run, they perform equally well. As a result, investing and trading are two distinct approaches to achieving the same goal. Increasing your market wealth, trading and investing have both proven to be profitable strategies for making money in the stock market. Investing is a more relaxed approach than trading, which requires constant tracking, discipline, and quick decision-making. Both have their own set of advantages and disadvantages. It is entirely up to you to decide which one is best for you. After all, it is your money that is at stake. So whether you're just getting started with one or, like me, balancing the two, stick to the rules and don't mix them up, and you'll be fine no matter what you do in the markets. This brings us to the end of today's video. We hope you've learned something new. Please share, like, and subscribe. We hope to see you again in the future.